What's good, everybody? My name is Michael Bass. In today's video, we'll be going over the RSI and identifying highs and lows, how you can combine those two into finding great entries, great setups, and just overall trusting your trade. By now, you should have watched the video going over market structure and time and price. So this video should make a lot more sense to you as well when just combining the two and overall making everything make sense, okay? So when we're talking about the RSI stands for the Relative Strength Index. If you don't know what the RSI is, this is that bottom section at the bottom of your screen right here, okay? This is what the RSI is. It's just a Relative Strength Index. Over here on the right side of it, we have our levels, the 15 and the 85. This is just identifying the lows and the highs of the market, identifying whether buyers are in control or sellers are in control of the market, okay? So this is what we use the RSI for, to see who is in control and see where the market is currently at, whether it be buyers in control or sellers in control. And it's the same way that we talked about with market structure. We use the RSI on the higher time frames as well to identify the trend in the market, but then we drop down to the lower time frames, the 15 and the 5, to identify the trades, to identify our entries and our stop losses, okay? So when we're looking at the RSI, like I said, the 1 hour time frame, 15 and 5 minute are focused, same way as market structure. The RSI is going to start looking a lot like how your chart is looking. As you'll start to see that, just for example, as we look at the RSI down below here in this same area, it starts to look how the chart looks as well. Not the exact same, but it starts to have that same structure. It starts to have the same structure, okay? So we can see that the RSI starts to push up, and what do we see? The market pushes up, makes a high there, drops back down, pushes up again, makes a high again, then it drops straight down, market drops straight down. What do we have? Rises up again, drops down. So what do we see it doing? It's doing that over and over, right? Now we're low. So when the market is low around the 15 level, what could you expect? That means that sellers have been in control and sellers are coming down, and now they're losing momentum, and that we're starting to expect buyers. That's when we see it coming from low to high. When we see it going from high to low, or low to high, the opposite, high to low, low to high, when we see it going low to high, that means that buyers are in control and sellers are losing momentum. And then when it goes from high to low, that means sellers are in control and buyers are losing momentum. When it's low, we're looking for buys. When it's high, we're looking for sells. Pretty simple, okay? And now we tie this in with market structure and as well with identifying highs and lows. Highs and lows are one of the most important things that you can learn in the market, because it starts to help you where you're looking for your entries and where you're looking for your trades. We're talking about three to four different highs and lows, okay? We're going to talk about session highs and lows, no tickers or money makers, session highs and lows, daily highs and lows, weekly highs and lows, and monthly highs and lows, okay? The higher, and it's going to go in a certain strength. Monthly highs and lows are our strongest indicator, monthly highs and lows. Then we go weekly, then we go daily, and then we go session, okay? So if you're going by strength, it goes 4, 3, 2, 1, okay? With sessions being quote unquote the weakest high and low, and monthly being the strongest, okay? So when we're looking at our chart, we already talked about it. We start to identify when those weeks are in the market, the weeks that you have, okay? So everybody here on this call too should have your daily high and low indicator on your chart as well. So I'm gonna just go ahead and throw this on there real quick. Let me see. I'm just gonna go ahead and throw that on here real quick. And if I can't find it right now, then that's okay. I'll just go ahead and use this one right here. So this is okay. All right, so like I said, we start on those Fridays, right? So if you're looking at your weekly, we wanna start identifying weekly highs and lows and monthly highs and lows. It's very easy when you're using the system to identify your months and your weeks. Very, very easy. We can see right here, we'll make this red. We'll make this a red for the monthly. We'll make this red right here for monthly, and black will be for weekly, okay? So that was the start of new month, going from August to September. And if we were to go back one more, let's just plant that one going from July to August. let's see. Let's just plant that one going from July to August as well, just so we can just do a little bit of back testing here real quick, okay? Like this is what you want to do when you're watching these videos. You want to pick your pairs, you want to pick, what you're trading, and you want to go through and just practice. You want to have these on your chart. These, once you do it once, it's here to stay forever. That's the beauty of marking up your chart. Once you do it once and you identify everything that we're talking about in these videos, you only have to, it's going to stay on your chart forever. It's going to stay there forever, and it's going to stay in your brain forever. And that's the most important thing. Okay. So already when we're looking at these charts and we're identifying highs and lows, it starts to make it a little bit easier. Okay. It starts to make it a little bit easier. We're identifying highs and lows. This black line that you see on the chart, these black lines that you see following, are identifying previous days and previous days highs and lows. Okay. That's what these black lines follow. Previous high, previous low, high, low, low from the previous day right there, high from the previous day, low from the previous day right here, high from the previous day. So you start to see where your structure is at. You start to see who's in control of the market, buyers versus sellers. Who's in control of the market? It goes back and forth, back and forth. You start identifying those highs and those lows, and you start to see, okay, well, who's in control of the market? What was the market? You could, by those circles that we just drew, what can you see? The market is slowly making its way to the downside if we're going off of this, the current week that we're in right now. The last 3 to 5 days from yesterday's move, 1, 2, 3, only thing that you could be looking for that move today is what? Is a sell. And what time does this come? In between our time and price that we talked about in the previous video. And look at where the trade bounces off of. A low in the market. This low right here served as an entry point. You see that? You see how beautiful that is? See how the market came, reacted perfectly to that low. If we go to the 15-minute time frame for entry, what do we see? Right during our kill zone time, right? Right off that low. You can't get any better than that. You take that entry, your stop loss is above the high. Once the candle's printed, you're in the trade, and where does it go straight to? Clears out the lows. And then we can take these type of entries. The market didn't clear a high yet. The market did not clear the high, did it? It didn't clear the previous day high, but why can you take this trade? Because the market played off of one of our indicators for entries, a daily low. That's how the structure, that's how the banks play off the markets. They play off daily highs, daily lows, weekly highs, weekly lows. This is where the banks look to get in the market. The banks won't always have the perfect entry, but they'll get in the trade. They have so much capital that they're not worried about that, but this easily could stop out the average retail trader. And they're getting a buy, and then what does it do? Drop straight down, and now your account's wiped. Okay, and you can see already that, what did you see happen now? The market cleared out the low, the day low, that the actual current day low, and then during New York session, then you start to see what? Then you start to see price create some form of support, and the market start reaching to the upside. So now we may start looking for buy placed up, but even then, what will we want to see? We'll go to the 1 hour to determine direction and see, have flows been cleared? If we go back and we identify 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, if we're about 10 days back in the market, about 2 weeks from today, what can you see? Market may drop down a little bit lower, right? We have some equal lows sitting right here. And in the video talking about liquidity and talking about, liquidity at institutional levels, you'll start to make more sense of why you want to wait until liquidity gets snatched and then start looking for the buys. Because in these type of instances, you'll see that the market will dip down very aggressively and then aggressively shoot up, and the trade will be an easy trade during your kill zone time. That's when you want your entries, during your kill zone times. These type of entries, as we see right here, that's not during the kill zone time, right? That's why that's not the buy that you want to look for. The trade of the day was a sell. If you didn't catch the sell, then the buy would be a very hard trade to take, because look how many times they just kept hitting the low of the day. You get in the buy, comes back down, you put your stop loss, protect your trade, it hits it. Now you try to get back in, goes up, comes back down, hits your stop loss again. And that's just a hard trade to get in. Good chance is that it comes back down, reaches even lower, and then it buys up during London or New York session. And that's how you start identifying your highs and lows. And now that this is the low of the day, this is where you can start looking for a potential entry, because once the market closes back inside that low of the day, bam, now it's reaching up to go reach for this high. So that's, that's a combination of market structure and time and price. And now the combination of when we're looking at the RSI as well, going into those times to trade, what do you see? If you know that NAS 100 is a New York pair to trade and you don't trade it during London session, you're very, very smart for that. I would always recommend trading the indices during New York session for US 30, NAS, and SPX. So you'll find a lot easier setups, and you'll save yourself a lot of money and stress. Because now going into New York session, what do we see on the 15-minute time frame? The RSI is very high up at 85 level. So it's already signaling that buyers have been in control. Buyers are in control, buyers are in control. But now going into the session, what's it going to do? It's not going to just stay up there forever. It has to, what goes up has to come down, right? And that's exactly what it does. We see right at that open, what does the market start doing? It drops down and it plays right off that high. Just like that, that's just, that would be considered an area of resistance. RSI is at a high. You take that entry, you take that trade, and you're very confident. You go on the 5-minute time frame, and you may even see a better type of entry. Now we look at the 5-minute. You can look at the RSI as well on the 5-minute. 5-minute and 15 or 4-hour entries, and you just identify it's at this high point. Look how is raising at the high the whole time from London session. High, 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 high. New York kill zone, 9, 10 o'clock. You're stalking the trade, it hits the high, bam, and you're taking it low. Where's your take profit? Daily low, take profit. You're in and out the trade. You're out, you're good, you're done for the day, just like that. You can't beat those type of things. You can't beat that, right? And you just have to keep doing it over and over and repeating over and over and over again. And practicing and trusting yourself. The market won't always, if you're going with the trend, the market won't always go and clear the previous day high or low. As we can see in these type of instances, the market's bearish. What does it do? It comes in test structure perfect, and then it drops down. Market is bearish, then it drops down. It doesn't clear the high, but what does it do now? It goes and clears the low, retest structure, and then it continues dropping down because what do we know? It has more liquidity to the downside that it has to go grab, and that's what it's doing. Look at the 1 hour, just to find that liquidity and find where the market is at. If we're looking at or monthly high, we're talking about highs and lows, right? This was the monthly high from the previous month. What do we see the market do going into the new month? It dropped down. This was the high of August, dropped down, came back, we cleared the high of August. So what is this telling us now? Sellers are in control. So it goes into consolidation for a whole week. The market was sideways for the whole week, but it's coming off of a what? It's coming off of a stop hunt. It stop hunted to start the week, and now sellers are in control. It might not be tanking down, but sellers are slowly making their way down, and that's what we see. Sellers slowly making their way, bam. Now you want to see retest, bam, drop even lower. Because we have what over here? We have the liquidity. We have that money sitting, which we'll be talking about in that next video, okay? So between looking at the RSI and looking at your daily highs and lows and knowing that you want to take trades off of, you're looking to buy off of the lows. Market's underneath a low. You're looking to buy off the lows with the RSI being at a low point as well. Buying off the lows, and if you buy off of a daily low, your target is going to be a daily high. If you buy off of a London session high or low, then your target is going to be the same thing. It's going to be that session high, session low. If you're in if you take a trade outside of the box, right? You take a trade outside of the box, bam, bam, and you take a trade underneath the London low, where's your first target going to be? Your first target is going to be the London high or the Asian session high. You clear out the Asian low, you take a trade, and now your target is going to be the Asian session high. If it hasn't cleared out a daily low yet. If it cleared out a daily low, then your target is going to be the daily high. So you just can't be greedy, because now if it only cleared out a session low and you're taking a shorter term trade, because like we talked about, the session highs and lows are the shortest trades, then all it's going to do is it's going to clear out the Asian session high, then it's going to drop back down and take you out the trade. That's why you want to take profit right there, so that you made your money, and now you even have the potential chance at getting back in a trade back to the downside. Okay, so that's the highs and lows are going to be one of the most important things that you could talk about in the market, and one of the best things that you can identify. And like I said, once you start identifying these things and you work them into market structure and time and price, and as well with the RSI, because the RSI is, like we said, is very similar to structure. It's very similar to structure. When it's low, we start looking for those buys, and when it's high, we start looking for those sells. But it plays into where you're at in the market and what time it is, because the RSI doesn't really matter to us during the Asian session. We don't care about this. We don't care about this. But now when we go and we look at our chart during London session and New York session, and we see that the RSI is sitting up high, now we're just looking for our setup, and we're waiting for structure to play out. And these are the same type of things. The RSI is very high in this area right here, but why would we not buy right here? If you're watching this video and you can answer this question before I say it, let me know. DM me, text me, do something, and let me know that you knew the answer to the question before I even said it. But we're not going to sell right here, because we look back our 3 to 5 days, 1, 2, 3, and you could go back even further, and the market hasn't cleared out any highs yet. Hasn't cleared out any highs, and structure is bearish, right? We can see that the market's been dropping to the downside. So we want to wait for the market to go and get as close to the high or clear the high for us to determine, our trade. And as we see going into New York session, it gives you a perfect test of the high, doesn't clear it, but it gives you a perfect test. And like we talked about on a 1 hour time frame, we can see that structure gives you that perfect test, and then it drops straight down. Okay. Retest, bam, bam. It's just beautiful. Okay. So, like I said, working in the RSI between your 3 time frames, the 1 hour, 15, and 5, and getting the correlation between the 3 time frames, getting the signal on the 1 hour, dropping down to your 15 and 5 to find an entry, and then using your daily highs and lows, your session highs and lows, your weekly highs and lows, and your monthly highs and lows to identify entry points and exit points in the market. All right. I hope you guys took notes. I hope you guys enjoyed the video, and I'll see you guys on another training very soon.